Ladies and gentlemen, welcome back to the channel. Jack Ram here, Realtor with Simply Vegas, giving you today another real estate market update here in the Las Vegas Valley. Today, I'm going to be talking about a lot of things that I missed on the last real estate market update last week when we went over all the sold homes, all the market prices, what prices are doing right now recently. And I'm going to go over a little bit more data about new construction homes, how much inventory we have, how many homes are building, and all of that. In addition to that, I'm going to put it into perspective and compare it to the 2008 real estate market crash and compare it to today to give you a different perspective. With that said, let me know, first of all, before we get into all this contest, let me know down in the comments if you appreciate these videos and if you just find them interesting or not, just because I want to know what the real need for these, if there is a real need to make these videos. I find myself having to explain these things repeatedly every day to my clients as I get people reaching out to me all the time, concerned about the market, especially because they've been getting their information from other sources that maybe don't, maybe they have a different perspective, and I wanted to, and every time I find myself having to share my perspective with them, so I figured maybe doing a video will be helpful to everybody else out there if you follow my channel. Anyway, with that said, hit that like button before we get into the content. But yeah, that's pretty much it. Let's get into it. When will the market bottom? I took some notes. I'm going to go off of them. When will the market bottom? So that was my first question, right? That I get from a lot of people. Are we going down right now? What's happening with the market? I see, these realtors putting up all these fear mongering videos, and I'm getting scared, right? That's the first thing that I get from all my clients, and I understand. I would be in the same situation, especially if I'm under contract with a builder. But then what I need to give you is my perspective and why I am thinking the way I'm thinking. So my perspective is, okay, what caused purchase prices, the home prices to go up over the last, let's say, 20 years, right? And if we compare it, we have to compare it to the 2008 crash, right? What happened in 2008 and why home prices went up then and why home prices are going up now. People are thinking we're going to have at least the worst case scenarios, at least that's what I would assume that you're thinking, that if prices are going to crash, they're going to go down 50%, for example, which is, probably back in 2008 in Las Vegas, prices have gone down about 40% because Las Vegas is a big growing city. So there was a lot of speculation going around it. And a lot of more people invested into it, and then it suffered a little bit more on the way down. Same thing as it is right now. We see a little bit of a correction right now versus other cities in other parts of the United States are not really seeing any drop in prices. But the point is, back in 2008, we had a lot of speculation on loans. The loan market was just horrible. Anybody, as long as you could fog a mirror, you would be able to purchase a home. You could go into any bank and they would give you a loan because they thought that real estate prices would only go up. So you don't have a job, not a problem. We'll get you a loan. You can't afford the house, that's okay. We'll do interest only loans. And then, these loans, it doesn't matter because real estate prices are always going to go up. And, even if you get an ARM interest rate, which is an adjustable rate mortgage, which means it adjusts as interest rates go up, you're going to get a higher payment every month. Well, if that is the case, then, it's okay. You can figure it out because then you can sell the house because the house is always going to appreciate in the future. That was the mentality back in 2006 up until 2007. And then we had the big crash where in 2008 we saw prices drop like crazy all the way until 2011. So because of these loans, that really caused, the market to really over leverage. Builders were over speculating. In fact, I want to show you this review journal data right here, this chart of how many homes were built back in 2008. And you see right here, ever since, this is only in Las Vegas specifically, okay? So you're looking at 1950s going, we have pretty much a straight line going up because the city is growing a lot. And then we had this boom in 2008 where we went from building in the 1990s 50,000 homes per year. We went up to build 100,000 homes per year, 150,000 homes per year, almost 200,000 homes per year were being built by builders. This is huge. The amount of inventory was going into the market while home prices were going up was out of control. It just didn't make any sense. Of course, when like Warren Buffett said once, when the tide goes down, you see who's swimming naked, right? When home prices started going down, we started seeing who was naked, and we started seeing all those loans come back as foreclosures. All these homes back on the market. The foreclosure market was huge. We had, a huge amount of homes. We'll go look into the data, how many homes were coming back on the market. And that was the reason why, because people could not afford these homes. Their mortgage payments were going up from $1,200 a month to, let's say, $2,500 a month. From people that were losing their jobs, they couldn't afford the house anymore. And home prices going up, or at least the monthly payment going up like crazy. Of course, the next obvious thing for them to do was to let go of these loans, right? Which means give the house back to the bank, and then the bank put it back on the market as a foreclosure. What happens then? We have more inventory, and at the end of the day, what matters for home prices is how much inventory we have in the market, because the inventory is pretty much the result of how many sellers we have minus how many buyers we have on the market. That's what it all comes down to. So if we have more inventory, it means that home prices could go in lower. If we have less inventory, home prices are going to go up. That's just math, okay? Just simple economics 101. With that said, that was back in 2008. Now we have a different situation. If you have tried to get a loan recently, I don't know if you have. If you haven't, try to go get a loan, and you'll see they're gonna do full background check, everything. They're gonna call your employer to make sure that you're actually still employed. They have a lot of regulations because now the government has stepped into Fannie Mae and Freddie Mac to try to get these loans under control. And all the regular conventional loans, the regular conforming loans, are very highly regulated, which means that home buyers have to really be able to afford a home. In addition to that, there's no such thing as adjustable rate mortgages. All those people that locked in these interest rates at 3% back in December or last year, all of last year and all the way until 2020, where interest rates were down to 2.5-3% for home buyers, they're not going to give up those loans. You know why? Because they have such a low interest rate on it that their payment is way lower than what anybody else will get right now on the market. And even though prices have corrected slightly, the amount of money that you would pay monthly to buy a home today is way higher than what it would be last year. With that said, does that mean that the market is not going to correct and is not going to go down? Absolutely not. That is not. It might be correlated to that. However, it's not every variable. There are a lot of more variables that are involved with this. So yes, we can see a correction, maybe an even bigger correction than what we've seen so far, and we're going to go into those numbers together. But first of all, I need to put into perspective where I'm coming from in the data. Okay, how much inventory we have, coming on the market. Is this, these are the homes built. This is not inventory. This is how many homes builders built back in 2008. And we're looking at the speculation here, almost 200,000 homes, okay? Versus nowadays we have 15,000 homes that are being built per year here in Las Vegas. This is like 2020 and forward. You see how low we are. Maybe we had a little bit of a spike here because of COVID. It stopped completely during COVID, and then it just went back straight up. Okay, how many homes are being built? Maybe we went up to 3,000. I don't know. But realistically speaking, we're not at 190,000 homes being built per year, okay, which causes to have less inventory in the market, and that's why we have home prices going up so much. It's just supply and demand. All right. I just want to show you this chart just to put into perspective where I'm coming from. A lot of people, were going at me. You're just trying to, how do you say it? I told you so. Prices are going to come down, and you're wrong about this. Or you're just a realtor trying to sell homes. No, that's not the case. I'm doing totally fine. Even if I don't sell homes for 3 years right now, I'm going to be fine. But the point is, right here, standing unsold inventory from 2008 and all the way to 2022. How is this inventory going to get up to these levels? Back in 2008, it doesn't show any prior than this, but we have all this standing inventory coming up because of the foreclosures, right? And then it slowly went down, and that's why and that's back in 2011, once we saw inventory hit down towards this level, we started seeing that appreciation here in Las Vegas, where we saw the market turn very rapidly. That was back here, where, towards the end of 2011, the inventory started going down, and this is where we started seeing quite some appreciation. 2011, 2012, 2013, and it switched the market pretty much from a seller's market that used to be over here back into a buyer's market. From a buyer's market back into a seller's market, which has been a seller's market pretty much for the last 10 years, pretty much. With that said, this is the standing unsold inventory. Even here, we're in February 2022, we're seeing a little bit of inventory come back on the market, because back in 2021, we were seeing at the beginning of 2022 over here in this area, we were seeing a lot of appreciation at the beginning of this year. We saw January and February home prices go up from January all the way until May, 15% in the Las Vegas Valley, which is crazy, right? Just in half a year. That's a rate of 30% of year over year home appreciation. Unsustainable, right? We all know that. Anyway, let's get back to the topic. Okay, trying to give you that perspective, right? Is this inventory going to go up here? My perspective is looking at how many homes were being built here and that we didn't really overbuild. That is number one, the number one factor that doesn't worry me at all. Another factor is what about the homes that are going to come, how is the resale market going to act, right? How are people going to act once they start seeing a little bit of home prices correct a little bit down, which they have in the last few months. And the question is, people that have a low interest rate are not going to sell their house. Okay. The only reason why they will sell the house is because they could get another better deal out there. Someone has to live somewhere. Okay, no matter what. So if you have a home and you have a 3% interest rate, regardless, even if you bought it last month at the peak, let's say 2-3 months ago, and you locked in an interest rate at 3%, they're not going to sell it to trade in for an interest rate of 5%, because you're going to have to go down to a condo to get a better payment than what you have right now in your house. Okay, so those people are not going to sell their houses. That's just a given. Now, what is going to cause them to move? Interest rates going down. And if we assume that the only reason why home prices are correcting right now is because interest rates have gone up and affordability has gone crazy, that we can't afford a home anymore, then in that case, we have to assume that if interest rates go down, then the real estate market is going to start picking up back again, which means they can probably sell their house to get into another house and have the same mortgage payment. But they would have to wait until interest rates go up. So the point is, interest rates is what's causing the market to correct, but not necessarily inventory going on the market, which is a consequence of that. But the reason why is the interest rates going up, and not the over speculation of people thinking that anybody could get a loan and selling homes for what they're not really worth. So the point is, right now we have a little bit of inventory going up, but if you look at it compared to the last 20 years, we see a pretty good comparison. I mean, in perspective, you zoom out a little bit, look, we're not here. People think we're here. I mean, homes are still being sold. In fact, let's start looking at some data on Matrix, which is my MLS. We're going to go through all the homes that are active right now in the market. We're going to see, we were down to, I remember back in back in January, or actually back in March, we were down to, I believe it was 3,000 homes available. Okay. The inventory has tripled. Okay. And people are saying, oh my gosh, there are 10,000 homes on the market. That's up 200%. The homes on the market have tripled, right? That's the data that you see online, and people are freaking out, right? But that's not really uncommon. You go onto here and we start looking at, what's it called? The homes for sale, how many homes for sale we have, okay? And we start comparing it. We had more homes. We had 13,000 homes in June 2019. That was when prices were way lower too. And then it's been going up, down. We had in 2018, this is when the market went nuts, before they started raising interest rates. And the market was going down. There was no inventory. I remember I bought my first home back in July 2017, which was right here. And then my home, because it was a new construction home, by the time it was finished in January, I had 10% of equity in the house because there was no inventory and people were selling homes. By August of June of 2018, the market was crazy. It was a seller's market all day. Not as crazy as it is right now, because obviously we had way less inventory, right? Back in February and March, right? But this is not uncommon for inventory to go up. We had this go up all the way until July 2019, where it was still, a pretty balanced market. We had good inventory. Homes weren't flying off the shelf, but they were selling within 2 months, a month and a half, 2 months, they were selling still. It was still a healthy market. Now, yes, this is what people see. Okay, we went from 4,000 homes all the way up to 11,000 homes, it says here in July, right? Now we're at 10,000, so maybe we're starting to see a slowdown in how many homes are on the market, right? Maybe people are starting to take their homes off the market because they can't get as much as they wanted. But this is not uncommon. At some point, we're gonna turn. And the thing is, the cure to high prices is high prices. So if you are down here and you have no inventory causing prices to go up higher, what's going to happen? Inventory is going to go up because it's too expensive to buy homes. So people are going to stop buying until it gets to a point where it's affordable. And you know what's the cure to low prices? Low prices. So once you get prices going down a little bit, which was back in September a little bit, people started buying again, right? This was after the crazy summer that we had. And I started seeing some inventory, I remember in September, where some new home builders started reaching out to me up until January, where things just went nuts and people started buying like crazy again because there was no inventory. Point is, this is normal to get that inventory back up. Actually, it's really healthy for a market because we need to get to a stable market. We need to get even more inventory. We probably need to be somewhere where we were back in June 2019 at 13,000, 14,000 homes on the market, and maybe have a regular market where people are buying, yes, but not as much. But let's compare that, the active homes right now, with the pending homes, so we can get how much we really have as far as months of inventory, right? If we go to revise here, we go to homes under contract, both the show and no show ones, okay? And this is pretty much all MLS. We're not looking at condos specifically or single family homes. It's all the houses on the market all over Henderson, Las Vegas, North Las Vegas, okay? I'm not gonna go into specific cities. But if we look at this, we see 3,285 homes are under contract, which means if all of these homes close and they sell, which I would suspect that would happen, then we would have about 3 months of supply, because you divide 10,200 homes that we had on the market, or 10,800, whatever it was, by 3,285, you'll get about 3 months of inventory, which means this is a healthy market. Anywhere between 3 months to 5 months, it's a balanced market where buyers and sellers, are right there. They're not going crazy to buy a home, and people are not going crazy to sell their house where they have to discount a lot. So if we get to that point and we stay with the inventory and we start seeing the inventory coming down, which from this data that I'm bringing up right now, we went from 11,000 to 10,000, we might start seeing a little bit of a slowdown of how many homes are coming on the market. Okay, so we still have less pending homes than what we had 2 months ago, because we were selling 6,000 homes, right? Probably like 5,500 homes a month that we were selling. Now it's gone down 40%. Real estate market is crashing 40%. That's the headline that you get, because fear sells, right? In fact, I'm probably going to name this video the real estate crash, because that's what gets you to watch this video. But at the end of the day, 40% down, we still have 3,200 homes selling. That's a good amount of homes. Homes are still going. Just to give you a perspective, right? Because that's what we're trying to cover right here. If you have a perspective of, okay, our homes, are we really in a bad market right now? If we stopped and no homes came on the market and we kept going with the pace of how many homes we're selling right now, 3,200 a month, what this means is we would not have any more homes on the market within 3 months, which is still almost a seller's market. But anyway, that is pretty much the perspective I wanted to give you, first of all. But what caused prices to go up so much right here? Let's go see a little bit the sales price and update you guys also on this. Back in May and July, we hit the max, right? Because as you saw on the inventory chart, where we had the least inventory was back in March, right? What happens back in March when you have such low inventory? We have high prices going up, and all those homes that sold in March probably closed in May, June, because it takes time for homes prices to close and then for the market to adjust. So those those prices are right here. We also had interest rates maybe at 3.5%, max 4% until then. Okay, and then we started seeing the 5%, 6%. So that's when the market slowed down a little bit, and now we are at 425 average median sales price in Las Vegas. Okay, which I think this is good. It's healthy, because it's almost a 5% correction. This is in July. I'm sure in August it's going to have a little bit more as well. But we're still up. If you look at year over year, 13%. I wouldn't be surprised if year over year right here we would be ending it up at 5%, 6%. So we get another 5% correction in the market. I wouldn't be surprised. I'm selling right now homes for 10% less of what I was selling them back in March. Even more if it's a spec home. Some spec homes, we're selling them for way less. Okay, builders are a little bit freaking out now, because they see all the fear just like you see it. They're not, they're supposed to have a little bit more knowledge, right, than a regular person. Maybe some of them do, but I see they need to get rid of some of this inventory, because at the end of the day, it comes down to business. If these builders, most of these builders that we have here in Las Vegas, they're publicly traded. So if these builders don't sell these houses, their numbers are going to look really bad, and then their stock price is going to tank. And a lot of these agents are freaking out. They need to sell homes. They're feeling the pressure from their bosses, from their managers, saying, hey, we need to sell this house. We need to sell this house. Drop the price, right? And this is mostly on spec homes. There are a lot of builders out there that speculated on what was going to happen with the market. They said, look, we can't catch up with this supply chain. I'm going to keep building as much as I can. Doesn't matter. Market is always going to go up, right? And I'm going to keep building as many spec homes as I can. Now, all these spec homes are coming on the market because they're due to be sold. They stopped now building. I mean, you look at all the builders, they're like done. New build starts, In every community, there used to be 10 homes a week. Now they're like 2 homes a week, 1 home a week, because not as many homes are selling. And the ones that are selling most likely are the spec homes because they're trying to get rid of them. Well, what does this mean for you as a buyer, right? What deal can you get now? Is now a good time to buy these spec homes, or is now a good time to buy a regular home and maybe get a resale home? Whatever the case is, it depends on you and the kind of buyer you are. I can tell you right now, there's a really good chance, if you're kind of flexible on the upgrades that you can get into a new construction home, now is the right time to get a spec home, because you must get something that someone else purchased. Okay, maybe they chose a certain cabinet that you like, maybe not, but there are a lot of homes, a lot of inventory coming up, and if you're kind of flexible and you can maybe remodel some things after, it would be a great time right now to purchase the house as a spec home, because they're giving these homes, some communities, they're giving these homes away because they need to get rid of them. Homes are already built, they can't sell them, they need to get rid of them. Okay, and that's what's happening. Here's the thing: once they get rid of these homes, what's going to happen? Well, I'm going to leave you to answer that question. What based on what you think and based on the data that I've given you, because it's all about perspective, right? And let me know down in the comments what you guys think is going to happen to the market and all. But in my opinion, once these homes, we go through all the spec homes that we have right now, that builders speculated on, a lot of builders are going back to only dirt lots, or selling the spec homes that they have. But then as soon as they sell the spec homes, going back to dirt lots and having people build their homes from scratch. No more, bidding wars, waiting lists, drawing lists, lottery lists. All this stuff is gone now, but they're going to go back to the market and say, okay, now this is how much a home buyer can afford. This is how much we're going to sell this house for, right? And they're going to let them choose all their upgrades. There might have some spec homes, but nothing like we had in the last 2 years. Okay, so, but the thing is, we're going to have to go through this inventory that we have. So in the short term, within the next 6 months is my belief, okay? It's just belief. I can't see the future, guys. So, don't think that I'm like some kind of, I have the crystal ball or anything. Nobody has a crystal ball. But my take is, since we're not building anymore as much as we used to in 2008 and the lending is fine, the real estate market is not going to suffer much. We're seeing this correction solely due to the fact that we have higher interest rates. But as soon as these interest rates, they already slowed down a little bit. I see a little bit more of a pickup in the market myself personally. But what's going to happen is we're going to stabilize, and then we're going to start over again. And we're not going to see 30% increases year over year, or 20% increases year over year. We might see 3% increase year over year, 5% increase year over year. That's what a normal market is, where it's kind of balanced, where home prices are going up with inflation, right? And nobody's killing each other, waiving all these appraisals, inspections to buy a home. Right. That's my take on the market. But yeah, I just wanted to talk about the COVID shock and what happened with the COVID shock, with the money printing that the government has done. Well, not the government, the Federal Reserve, whatever. They're all the same. They all work together, even though they're not supposed to. But that's another topic. Money printed. We have too much money being printed. Back in 2020, they printed 40% of the money in circulation in the last 2 years, which has never been seen. So that has happened. They're not talking about reducing the amount of money printed out there and the credits printed out there, because credits is also money in circulation. So money is going to stay in the system, because when have we ever paid off our debts? We never do, right? As the United States, we never do. You look at the debt charts over. Let's look it up together. U.S. debt. U.S. What was the chart? National Oh, there it is, dead clock. But there should be a chart. No, let's get the chart. Images. Okay, here's the debt chart. Going back to 2001. Look at the debt, the GDP with highest, okay, whatever. Federal debt held by the public from 1900s to 2050. Oh, this is what they think is going to happen, but this is what happened right here. You see, yeah, we paid off after World War II, whatever, but it's been going up like crazy, and overall, it's going to go up, and over time. So, look at that, U.S. national debt. Look how high it is right now. They think it's going to go to 2050 over the next 30 years. I mean, it's possible, and that's when we're going to see home prices triple or quadruple what they are right now. Anyway, that's what happens with when money printed happens. That money goes into circulation, and then that money has to buy something, right? So people have more money to purchase goods and services, and then eventually inflation goes up. That's why we had such high inflation, because money was printed by the Federal Reserve. Low interest rates. The Federal Reserve also dropped interest rates, which caused real estate prices to go up. Obviously, people can afford every month more money, to spend more money on housing, because interest rates are lower, so they can afford more house. So prices are going to go up as a consequence. And then, builders, speculation, they have, also people's speculations more than anything, where people just thought that, hey, I've got to get in as soon as possible before, it's too late and I'm not going to be able to afford a home anymore, which is true. And, most people did get in the housing market before January, so they can actually afford a house. And right now it's kind of difficult, But at the end of the day, you got to consider, hey, even if you're under contract right now, you're buying a home, it might be a good time, because if they drop interest rates again, you can always refinance. You always have that opportunity when you own real estate. So my take on it is, at the end of the day, just wanted to give you more of a market update. I want to show you the pending sales. Home prices were down from 445 to 425 right now. And this is as of July. I think in August we're going to have a little bit lower, even maybe 415 or so is what we're going to get. But at some point we're going to have to reverse here. I don't know how soon it's going to happen. It really depends on what interest rates are going to do. Regardless, one thing is sure, your monthly payment over time is not going down. So if you get in and you're in it for the long term, forget about all the fear that is being spread out there. Just buy a home. It doesn't matter if you're going to go with me as a realtor. I would love to earn your business, but it's not like I have some kind of incentive or whatever. Yeah, I'd be incentive, I guess, to get you to a home. I'm just digging myself a hole. But no, my point is, guys, seriously speaking though, if you guys are looking, to buy, it doesn't matter. You can go with another realtor. I don't care. Buy now, get in it, forget about it. Forget about what's going to happen. As long as you get something that you can afford, lock in a 30-year fixed interest rate mortgage, where your payment is not going to change. Okay. And then guess what? If interest rates go up, that's fine. You locked in a low interest rate. If interest rates go down, even better. You get to refinance. And now your mortgage is like $500, $1,000 less. Okay. But now you're locking yourself in at a certain payment. You have a great opportunity as prices are dipping now. We might get up to 10% off on a home, or even more, depending on the home that is available. Lock it in, lock in the interest rate, let's say at 5.25%, 5.5%, whatever we have right now, and buy a home. If you don't own a house, okay? If you're an investor, maybe you can wait around, because at the end of the day, who cares, right? But if you're renting, good luck. Good luck, really. Stay in your house. That's fine. You know what's going to happen? Next year, landlord is going to bring up your rent. You're going to go from $1,500 a month to $1,900 a month. I see it all the time. It happens all the time. And guess what? You're going to be in a situation where, my landlord is raising my rent. What am I going to do now? $1,900. Okay, let's go see. Maybe I'm going to move. I'm going to get something cheaper. Good luck with that. You go there. Everybody else is charging also $1,900, if not even more. So what do you do in that situation? And then this could happen in 2 years from now, in 3 years from now. So is it really smart for you to not purchase a home right now? Like literally, if I'm talking to you right now, right, and I'm telling you, okay, buy a home right now. Just like I told everybody, buy a home during COVID, right? When March hit, when everybody was going crazy, I bought 2 homes. They're like, yep, that's the time. And now is the next time to buy it. Now is the next best time. The best time was yesterday or 2 years ago or 30 years ago. Now is the next best time because that's what you have control over. Once you get a mortgage payment locked in for 30 years, now you have control of your life. You have control of how much you're going to pay every month for your living expenses, and you're not subject to your landlord and to anybody else. That is going to tell you how much you have to pay in rent. Okay, that's my take. You guys take it however you want. Let me know your comments down below in the description. Would love to have a debate with you, and just go off of each other. Let me know what your thoughts are. My take, market is going to reverse pretty soon. Not sure how soon, maybe within the next 6 months. And I might be completely wrong. Maybe you're going to give me, you're going to show me this clip later on. You're going to say, hey, it's going to reverse. I might be wrong, but in the long term, I'm pretty sure I'm going to be correct. With that said, thanks for watching. I'll see you guys on the next video. Hey, hit that like button always, guys.